Alrighty, traders, good afternoon, good morning, good evening, and welcome to our, I think it's the third session here with the investment draft. Hopefully everyone is doing well. We've got Tyson and Chris here with me today. We're going to be talking about stocks, cryptos, and Forex, just like we do every week. So let's go ahead and get started. Don't forget, if you have not already subscribed to the channel, go ahead and subscribe to the channel. Also, smash the like button. We'd like to get the video out to as many people as we possibly can. And that's how we beat the algorithm, the Google algorithm, by going ahead and smashing that like button. So welcome, everyone. It's going to be a great show. As always, Tyson and Chris had a great show last week. And today's going to be no different. We're going to have a great show. We're going to talk about a lot of opportunities. Make sure you got a pen and paper ready to take some notes because we're going to be talking about some trade setups. So let's go ahead and get started as we dig into the details. And here is the panel. Chris and Tyson, how are you doing this morning? Oh, this afternoon, actually.
Doing great. Happy Monday, everybody.
Happy Monday. Doing good. It's good to have you back, Papa G.
Papa G.
G.
Papa G is back in the house, man.
Awesome. Let's make some money.
Yeah.
You guys aren't seeing that, are you? All right. So, yeah, we're going to make some money today. So, absolutely, let's go ahead and get started. Firstly, you want to start off with the same thing that we do every week, stocks. And you're the man, Chris and Tyson. What are we talking about stocks right now?
Chris was just bringing up a really, really good point on what is going to be a catalyst for the stock market. I'm going to go back. We'll have a conversation about that. And then I want to go back to one of my old, not so greats, but one of my old trustees that I still have a lot of faith in and honestly a lot of shares in. So, Chris, you were mentioning some really kind of crazy stats about what's going on this week.
Yeah, so basically it's kind of a political game of chicken between Democrats, Republicans. We have the tentative deadline today for the bipartisan infrastructure package. We have the debt ceiling deadline on Thursday, so Congress has to pass the stopgap funding by Thursday. Essentially, it's, Democrats want this, Republicans won't budge. They're not going to take concessions. It's going to be an 11th hour and 59th minute type thing. Look, somebody's going to blink. Most likely they're going to get it done. Neither side wants to be blamed for, a government shutdown. If we do it, we're looking at about 6 million jobs and 15 trillion in wealth evaporating over the course of the next, 1 to 2 months if we go on to this, temporary shutdown. So again, it just looks bad. The optics look bad. It's just, you can't really see any type of, functional, we all need to get along in Washington, D.C. It just doesn't exist anymore, which is demoralizing and frustrating. But nevertheless, this all kind of started last week, Tyson. I mean, you and I had a really interesting week in the stock market last week. Equities on demand, we had like a very awful gap on Monday. The market spent the entire week fighting back. Today, the market still is in, bullish territory and clinging. But I just did my YouTube session this morning, and I think the levels that we want to watch, I want to watch the highs of all the major indices, and I want to watch last week's low, because I feel like there's a lot of uncertainty this week. But unless we break those highs or break those lows, we might just be looking at an indecision week. The Fed was reassuring the markets that, yes, although it's inevitable, we are going to have to taper and rates might raise eventually. They still wanted to soothe the market and, pet them, comb them, or just put a blanket over them, make sure that they're all warm and fuzzy. Like, the Fed is here to the rescue, and they'll do whatever it takes to make sure that employment is solid and inflation is under control. Now, all central banks are starting to take note. So when we start going from stocks into Forex, this is starting to be the narrative. Well, like, Bank of England is starting to see a stronger pound because rates are looking to hike by February and June of next year. The RBNZ is already mentioning increasing rates. The dollar's talking about tapering and raising rates. So I just go back to stocks for a second. This week, everything seems to be on the right side, Tyson. Things are bullish right now. We're not necessarily breaking new highs. I did want to note, however, that the SPY was lower this morning. So was the Qs, but the DIA was higher. We might be going back into this, growth versus value play this week and just see how the certainty or uncertainty plays out. So Tyson, we've got a ton of income plays this week in equities on demand. I think I posted this in Telegram for our group this morning. What do we have here? I have, let's see, we have income plays on Fisker, MVST, Skills, Rocket. What else did you income plays on? What else? Skills, Rocket. We did SoFi. I'm trying to think what else you had for this week. And anyway, we have like 10 trades running. I also put a bunch of covered calls out for this week on CLFX, or no, those are credit spreads. I'm sorry, Alcoa, MRO, Key, Arrival, and Fisker. Tyson, I might lose some stocks this week in a good way. I might lose them at highs with covered calls and hopefully turn. I mean, I was looking at my profits. It should be like $6,000 or $7,000 on some of these stocks if they get called away this week by Friday's expiration. So fingers crossed everything goes well this week, and I've got some cash to work with. And whether we have up, down, or sideways markets, you know that we're going to be doing our best to buy things on sale, buy what we like, and keep making money.
Yep. And one of the plays that we have expiring this week is silver, SLV. We've got a spread in silver. I like it. You know, it's interesting. I think there's a really interesting pairs trade, Chris, that I just thought of just now. I was thinking, so we're going to be talking a lot of sector stuff here in webinars and different things like that. And I was thinking about a sector play of where XLE, the energy sector, is trading right up into an amazing level of supply right now, like literally like right now.
Yep.
I see it struggling around this area and having a sell-off probably over the next week or two. I don't necessarily know if it's going to tank down, but I see it struggling at this area, selling off. And then I was like, okay, well, the XLE is at supply. The XLV, the healthcare sector, is at demand. So you could do a pairs trade by selling the XLE and buying the XLV and look for kind of a trade called the come home trade, right?
Yeah.
So you got two really high quality sectors that mean a lot to the economy. They're going to kind of come in balance. XLV rallies, XLE sells off. However, I like this one better though, Chris. What about, because I think there's less risk in this, what about selling the XLE, the commodity driven sector, and buying more of the SLV? I love where the SLV, I love where silver's sitting, and it's a commodity, it's an inflationary play, but I think oil's overdone to the upside. So we look for a little bit of a sell-off in oil, a little bit of rally in silver. You still have that inflationary play, but you could potentially in that trade make money both ways. Or if I'm wrong in one, I make money in the other. If I'm wrong in the other one, I make money in the. So it's a way to hedge the risk, and I think it's a pretty high probability trade. So I like both of those. I like buying silver, selling the XLE, or buying the XLV and selling the XLE. I think the better of the trades, technically speaking, probably for the next, I'd say 1 to 2 weeks, would be sell the XLE, buy the SLV. What do you think of that, Chris?
I like that a lot. I know that, I've had some interest for a while on SLV to get basically anything below like $20 for SLV. Yes. I love that price. And so we have a trade that expires this week, the 1st, so Friday's expiration, that gets us, if we get assigned, we actually own it below $20. We have another one that we're sitting on the same thing. We'd own it like $18 and change. So I think we went out to like November 19th on that one, didn't we, Tyson?
We did,
yeah. Okay. So SLV looks great. And, we're looking at kind of conservative upside of 25%, really solid upside potential around 45%. So I am not going to complain about any profits on SLV. As far as the sector plays, I love it. We have so many good ways to, see that sectors are outperforming others. Some are going much faster, much more bullish. Others are selling off. And that's one thing that comes into play is, traders and investors are wanting to know how to be diversified. Look at your sectors, right? We've had, for the most part, overall, the markets are bullish. Path of least resistance continues to be bullish. Sectors, for the most part, are, post-COVID performing very well. But we are starting to see that the cream is rising to the crop, and those that have been overbought and overextended are starting to come back. So just like Tyson said, if you look at those pairs, if you look at XLV, if you look at that is XLV is healthcare.
Yep.
XLV is healthcare. That has had a nice slide to the downside. I would actually, so Tyson, right now, looking at XLV, it's trading around 120, 129.90. Let's just say 130. If there's a way that I could get some ownership around like 127 or lower, I really like XLV off those levels. So I would like to see maybe a little bit more sliding on XLV before we really start to take that pairs trade, like you said. But it's an awesome setup to exploit that strength versus weakness.
Yeah, and I think kind of seeing, I'm not sure if we're going to get down to the 120, 125, but I see there's kind of a reverse gap fill down towards that 127.50 level that we put in. I think that could be in the cards. I like that play though, because there's also, one thing that we're going to be talking a lot about in the upcoming webinars, and we're actually going to be putting on a class, is kind of the idea of sector rotation. And people need to understand that in certain economic cycles, when you're early on in cycles, there's sectors. Just give you guys a little bit of a hint. In in an early expansionary environment in a cycle, you want to be in energies, industrials, materials, consumer discretionaries, because that's when money is typically getting cheaper and creating kind of a floor. That's when we see expansions and infrastructure, people traveling more. They're coming out of a bad time, going into a good time. But then once you start to get out of that, you want to start to go into, like right now, I think hiding out in financials is a really good thing. Real estate was good for the last year. I would start to get out of real estate, not don't sell your home, but get out of some of the home builders, because what happens is when we start to have worries about raising interest rates, we have this flood of people buying and refinancing and stuff, and that helps real estate stocks because they want to get in before the rates go up. But then once the rates go up, so you want to go. Let's just say early on in an expansionary cycle, you go discretionary stocks. People are going to buy their Nikes. They're going to go to their movies. They're going to do that kind of stuff early. Then a couple years into that, you want to go into the financial stocks once we create a floor in the interest rates, the real estate stocks, once we create a floor, because then people will start to buy up real estate looking to get that cheapest money. When we start to get signs or rumors of raising interest rates, you dump out of real estate, you go into financials, because financial spreads and margins actually start to go up. So, Chris, there's ways, and right now we are I think we're getting later in the game, which is kind of weird because we haven't even raised interest rates yet.
Right.
But I think the financials are starting to get to a point they're already pricing in the margins and the earnings they're going to earn when the interest rates are when they raise the interest rates.
Yep.
So I actually want to start looking for late economic expansion type of sectors to go into, such as like staples. These are the boring ones, right, guys? Like Procter and Gamble's, which was, toothpaste makers and toilet paper, utilities and healthcare. So I actually think, I'm not saying right now, but I think over the course of the next, I'd say 2-3 months into next year, looking at consumer staples, utilities, or healthcare is going to be the way to go. I
agree. And Tyson, actually, while you're talking about that, I just looked at the 10-year note and noticed that, we're at 1.48. I noticed the mortgage, the average 30 years now 3.13. I was actually reading over this weekend that probably by this time next year, we're talking about the average mortgage probably at 3.5 to 4%, as opposed to where it was literally a month or two ago, which was sub 3. So, is real estate gonna overheat and crash? Probably not, because demand is still crazy high and inventory is still super low and rates are still actually low. We're just in a phenomenal time right now. Like, if you are selling your home, you're selling at the high and demand is obscene and people are paying just, sight unseen, over asking prices, and it's incredible to be a seller. But you also have to turn around and be a buyer in the same environment, which is a crazy high real estate market, and prices a little bit overinflated. Yeah.
If we want to know when the real estate market's going to be overheated, and I mentioned this a few months ago, I think it's not yet. Here's what happened. We're actually sitting at a more affordability rate, a better affordability rate today in real estate, even though houses are so high than we were in 2007, because of the low combination of higher incomes and lower interest rate.
Right.
So here's the deal. If incomes maintain the same levels and interest rates even go up to 4%, we're still not overdone.
Still okay.
If we get above 4% and income stays stagnant, that's when to be concerned. But right now, Chris, I'll give you an example. In 2007, the average the average annual mortgage outlay compared to annual income was like 36%. We're at like 32% right now. So we're still not overdone on the upside. And if we can maintain that 3.5-4% rate, and we can have incomes kind of stay still or even go up. And I think incomes are going to go up. More companies are starting to pay more. Right. So I don't necessarily think that we're going to see continued booms in the real estate business, but I think we're going to start to see some stagnation and start to see a normal appreciation rate in the real estate market is about 3.5-4%. That's good.
Right.
You can't look for these 20%, booms. It's not sustainable.
Right.
My house appreciated, I think it was like 36% in like 10 months. It's like, are you kidding me? That's just nuts.
Yeah.
But if I can get 3% with some of the tax benefits, I'm happy with that. I think that's where we're going to be. And then, I don't know, maybe we'll see another huge leg up and that will cause a euphoric bubble. I don't know. I don't think it'll happen in the real estate market. So I'm fine with being in real estate, but I want to look for a little bit of, so you mentioned we have to have a bullish bias. How do we stay bullish but cautionary?
Right.
Go into consumer staples, utilities, and healthcare. And it kind of leads me back to that. Let's buy the XLV. Let's sell the XLE. Let's do that Paris trade. So
I
really
like that a lot. Yep. Gary, would you like to chime in?
Yeah, man. I tell you, listen. Hey, you guys are having great conversation. I don't want to interrupt, but it's definitely good a conversation. The question I have for you, though, Chris and Tyson, is when you guys talk about these different levels. I know you guys are looking at technicals when you make these decisions, right? So, like for instance, XLV. If we go into XLV, Tyson, you mentioned something that the price wouldn't get down to 120. Is that what you said? Don't expect price getting down to about
120. It very well could, right? Because again, a low tide sinks all ships. If things go haywire in the market, this could continue to get beat up. I do think, though, if the market does get beat up, I think what's going to happen is this: money's going to come out of the winners, and it's going to look for high quality losers, right? So what stocks are still high quality?
Growth to value,
exactly.
Value to growth. You're going to see that switch. We've been talking about that all year. That dichotomy is so important. That correlation is crazy right now, where it's like tech money is probably going to have to go somewhere else. Crypto money is going to have to go somewhere else. Like there's a lot of cash out there that wants to go in the markets, but people aren't stupid. Investors aren't stupid. Hedge funds aren't stupid. That type of cash is going to go into something that still offers upside and value, not that it's crazy overextended. So I think tech money ends up going into value, and just like Tyson said, staples, utilities, the boring stuff is where that value really gets a lot of growth. And that's why, Tyson, we've been talking about a lot of infrastructure plays. I'm in a lot of steel right now with Alcoa. That's aluminum, and CLF and X. MRO is a couple. FCX is another one. There's a bunch of stocks we've been looking at for those energy plays and infrastructure plays.
Yeah, and typically the XLV. So the XLV is a little awkward right now because I think it does have a little bit more. It's a little overdone, a little overcooked on the upside because of COVID.
I was going to say because of COVID.
It got bid high, right? It got bid really, really high with these drug makers and these vaccine makers and stuff. But it's typically a safe haven stock. I think it will fall back into that, and it's a. Bottom line is, if the economy does go through a slowdown or goes through a little bit of a sell-off, XLV, XLU, and XLY will be places that you guys can go and look for some safety in. Those are the consumer staples, the healthcare, and the utility sector. So, but yes, we want to tie this back to technicals also. Mm-hmm. But Gary, in the stock market, it's a little bit different. Technicals matter a lot, but what really matters is being long in the right stocks at the right time. Yep. And being long is very, very important. So the sectors that we're talking about are not going to zero. Not going to happen. Could they go down a lot? Yes, but it's about relative performance. The market goes down. How do I lose less? And the market goes up. How do I make more? So how do I risk less to make more?
Yeah, right. So how do you determine which sector to go into? Is it a technical decision, or is it just based on new fundamentals that you're accumulating? And then make a decision saying, hey, the sector looks like it's good right now based on what's happening right now in the economy, in the world, whatever. Is that what you look at, or do you go back to...
Chris and I developed what's called a sector sniper, and we developed a scoring process. And honestly, I would love to act like I'm a genius and I found these, but the sector sniper scoring process told me that the XLE is overdone and the consumer staples and the healthcare are ready for a rally. So from my perspective, I would love to say I'm a genius and I found these, but there's a process, a technical process, and a strategy that we've developed to help us with this stuff.
Okay. Well, I guess then next week, I think that's what we need to do. Just give them a bit of a glimpse of what they look like.
And if you can, join some of the webinars 7 p.m. tonight. Chris and I are going to be
showing some. I'll post a link. I'll post a link for that tonight.
Yeah, show us some more details on. If you like this conversation of sector rotation and the whys and the wheres, and then having kind of a formula blueprint done for you. So because that's the big thing. What Gary just said is I don't want you guys to think that this is just some guess. Mm-hmm. It's not. It has something to do. There's some obviously experience in kind of where we're at economically, but a lot of it has to do with where we're at technically and what sectors are setting up the best, possibly for the best rebounds or the best sell-offs.
So what you're saying is this is a strategy, it's a thought out strategy of exactly what to do, what place to go ahead and play.
100%. Yep.
Okay. Well, good. Let's go ahead and Tyson and Chris, currencies. Let's talk about currencies right now. And Chris, let's start off by talking about the infrastructure budget that they're trying to get passed. And we have to look at things like this. I have absolutely zero problem with stimulating the economy when the economy needs to be stimulated. But we have to go into the details of the actual budget. And we're not going to get into that right now. But the biggest problem we have right now is, of course, we have inflation high. The central banks cannot raise rates. They're holding back because the economy is not where it needs to be. We cannot go ahead and raise rates when the economy is struggling the way it is right now. So we've got a couple of issues here. If they're going to be printing money to pass these bills, this is going to mean a lot more pressure on I'm not just talking about the dollar itself. We're talking about all central banks. Anytime the central banks start intervening to try and stimulate the economy, what's going to happen is going to put pressure on the actual currency itself. So I want to have a little bit of conversation around this because we're talking about the stock market. Stock market's been in some rallies. Last week, we had a bit of a sell-off last week on the stock market. I haven't looked this week to see if it's how's the stock market. How did it open this morning? Was it up this morning?
It's flat today. It's flat today.
Flat.
Yep. I think honestly, Gary, I think we're gonna be waiting until Wednesday, Thursday, debt ceiling. How's that resolved? Does DC get do they get to pat each other on the back and say job well done? Sorry we had to stay so late and we were a-holes to each other. But I think it's going to be a lot of uncertainty because last week we started to see the precursor, right? Last week was like, oh crap, there's some uncertainty. And so we gapped super aggressive on Monday and then spent the whole week fighting back. The Fed tried to reassure the markets, but it wasn't enough to reassure new highs. And it wasn't enough to really scare the markets into fresh lows. So that's why I said at the very beginning, watch those highs, like watch the all-time highs we've seen in the U.S. markets, but watch last week's lows. And that's really the play for what's next.
Yeah, because if you look at the chart, if you look at the dollar index chart, the dollar index chart currently.
I'm going to push back on the idea that the economy can't handle an interest rate. I'm going to say BS. I think our economy is hot, is great. I think people are flush with cash. I think businesses are making more money than they ever have, and we have a stock market and a real estate market sitting at all-time highs. I think the opposite is true. Man. I think this is as good as it gets, and they're going to be way behind the curve. And we're going to go through a recession, and then they're going to be out of bullets. I think that's my big concern is that they didn't raise interest rates fast enough to slow down what could be happening.
Yeah. And I think they will. I think that, all the central banks are very calculated with how they're doing it. Actually, one of the plays this week, Gary, I'm not sure if you guys like this one or if you looked at it, but one of my favorite plays this week actually was the pound US dollar. I've been kind of, that's been on the shelf for me for the last couple of months, like not really doing much with a pound dollar, but that 3,600 level is so solid for support that I like long. I mean, if we're talking, let's say the sterling gains bid because we're going to look at Bank of England raising rates. If we start to see across the board, the pound is, buy the rumor, sell the fact. So if BOE is going to be a little bit more hawkish, a little bit more, favoring a rate hike in February and June, I think, of next year. I mean, look, it's pretty obvious. If I'm long now at 37, my stop loss, as long as the daily candle doesn't close below 36, I think we have upside potential to 39 and 1.40, potentially all the way to 1.42. So we're looking at about 100 pip risk for a 200 to 300 pip, I'd say, conservative upside, all the way up to 42 could give us a 500 pip upside with a really straightforward setup. So that was actually one that stuck out to me this week for, getting long pound dollar and just making sure it stays valid.
Yeah. I'm looking over here.
I hear some. I don't know. What are you thinking, Gary?
No, I agree. I do agree.
Stop loss. That's all I'm saying. Like usually I'm trading areas and I'm like, all right, I'll scale in, I'll level in. But this is like, look, it's wrong. If it's below 3,600, I'm out. That's it.
Yeah.
Like if I'm right, I'm right. If I'm wrong, I'm wrong. Like I'll take it as one of those binary trades.
Yeah, no, I'm going to agree with you on that one, Chris. Because if I look over here on the chart again on the 1 hour, we do see an absolute swing from last week. Last week came back. We had a nice little rally. Then we had a pullback. Obviously, we had a lot of rates coming out last week, decision making for the Feds, and then we saw a pullback later part in the week, which gave opportunities for traders that were not in to get in on this trade. So. Buying, absolutely. We're definitely going up. If you look at the daily time frame, is also showing that support that you just mentioned there, Chris. We don't have the divergence. I don't have the divergence on the chart here that I'd like to get excited about, but it is holding that support there at 136.73. It looks like it. So anything above that, 136.73. If you like writing down numbers. Write down that number, 136.73. Stay above that. I do agree with you, Chris. I think we're gonna rally up. I looked at the dollar. The dollar. If you go to the dollar index and take a look and see what the dollar index is doing, we've got a lot of range bound trading on the dollar index. But we are expecting a little rally on the dollar, but that's before, sorry, that's after we have actually a dip. So we are expecting a dip first before the rally on dollar, and that could be that bullish move that we're going to see on the pound US dollar. So I do agree, and you can see that the dollar is in an overbought condition, so there is correction due and a sell-off on dollar. So pound US dollar, I like the pound US dollar buy on that. Yep, absolutely. Yep.
Cool.
Awesome.
Yeah,
I've got one for you guys. I got a question. I'd love to get your guys' opinion on. My favorite trade for the week, and I think this is just more than just a weekly trade, is it goes back to, I think we've been talking about this for the last few weeks, about trading currencies that are, right now, a lot of what we talked about up to this point is we think, but we're not 100% sure, right? And we can never be 100% sure. But there's a lot of question mark, like, oh, are we going to go through inflation or not? I like the Aussie CAD. I like the Aussie CAD buy in this area. I like the weakness that we've seen over the last few weeks as an opportunity to start looking to buy in. What do you guys think of this trade? I'm looking at a push down. If we get a push down into about.
Did you say Aussie Swiss?
Aussie CAD.
Aussie CAD, gotcha.
Yeah. Yep. So here's my exact trade that I'm looking at. So I'm looking for a push up over the course of the next, I don't know, let's say 1 to 4 weeks. Again, I don't think this is a just for this week trade, but I like it. It's the top trade in the money flow trading room. I'm looking for a push up to 94.45. Right around that level. I think we've got some nice supply sitting at that level. We have a little bit of a pocket sitting there that I think we could go back up and tag. 94.45 or so. This is the way I'd like to get in. I'd like to kind of bracket it. I think we could see a little bit more weakness to the downside, maybe another 30, 40 pips. I want to start buying at 91.65 if we push down, or if we are able to rally up and daily close above 92.13, I want to buy there. So I want to buy at 91.65 or a daily close above 92.13, target of 94.45 and a stop of 91.
So, okay, so you wanted to close above what price, Tyson?
If we get a daily close above 92.13, that'll kind of be my confirmation that the bulls are kind of starting to take control.
Yep, I like it. That's
all right,
above
so
today's
92,
high, right?
Yeah, above today's high, basically.
Yep. Okay.
Yeah.
So today's high is right here, 92.13. Okay, so if you want to close above that level.
Yes, close above that level, or if it doesn't close above that level and it sells off down to 91.65, I'll buy there also.
Okay. Okay, and I'm going to agree on the direction. I believe, yep, I absolutely would agree that we're going long. The entry point on this, man, just buy right now. Buy right now. And let me tell you
why I like trading it with the breakout or with the bracket, because if I got into both, I'm kind of buying right now, right? But I'm waiting for the market to kind of give me that, either come lower and buy or break above and buy. If I got into both trades, you're right. It's basically a buy right now.
Right. So I'm going to go ahead and throw out an opportunity here on the Aussie CAD, and let's go ahead and buy at market and chase off the 20 pips. Let's just grab 20 pips for right now. And I'm going to go down to the lower time frame right here. I want to take a look over here on the 1 hour. And based on this correction that we've had here, let me see what I've got in already on this. I don't think I've got... Nope, I don't have that in. Okay.
Trade, Gary, do I get commissions on that, or what's the deal here?
Oh yeah, do. It's absolutely, it's due. So let's do this. Let's just go ahead and throw in a trade right now at market. We're going to go in with, and what I like to do is I want to go in with a cost averaging approach. Buy in exactly at the current market price. It doesn't matter what time frame you're going to go ahead and use. I like to space out my orders 25 pips apart for each other. I like to go in with 5 orders at a time. And all I'm going to do is going to go ahead and capture 20 pips on that net profit. So 20 pip net profit on that. And by the way, I'm already in on 3 positions. So this right here is just another position right here that traders that are not in would want to get in on. And go ahead and say okay to that. So there it is. A buy, Aussie CAD, right there at market. And looking for just a 20 pip grab. Now, I think if Tyson is correct in his analysis and the market does go ahead and break above that level, there would be another opportunity for you to go ahead and look at another opportunity getting on this. But for right now, quick 20 pips, we should absolutely see this. And I'll tell you why, Tyson and Chris, if you look over here, notice how we had this big, strong rally, and the market's gone ahead and zigzag back down south. You can see right here, it's got a nice little zigzag. So it's due for its rally. This is a good, solid place to go ahead and look to start buying. We're not quite in the oversold condition, but that's okay. But we should see a rally. And if we do dip down a little further down, that's why we put in the cost average, just so that we don't have to be perfectly correct, that we can go ahead and make 1 or 2 errors on our entry point and still make good money. So 20 pips would be an absolute solid buy and a solid trade on this one right here. So Aussie Cat, I like it.
Gary, Chris, question for you, because I like that 20 pips. What do you guys think about this? Do you guys like the trade enough to set up something like Turning Point Max, Perfect Storm Max, Target Trading, whatever it might be, and look for those, kind of harvest that income all the way up to that ultimate target of 90? Are you as bullish as I am up to 94.45 to kind of take 20 pip clips at a time all the way up to that level? I am. What are your guys' thoughts?
Perfect Storm Pro is already running on that same thing, Tyson. Aussie Cat bullish. I've got it running. So it's, I'm going after the price level of 9,600, which is 9,600, 9,650 is where I want to turn it off. That's where I'm happy with the bullish side. But it'll eliminate risk every 50 pips. If it's up 50 pips, distance of 10 away from all the entries and give me, typically my trades close out 30, 40, 50 pips, maybe a trailer. I get a runner, maybe I'll get 70, 80, 90 pips. But I've got Perfect Storm Pro already set up for that. Yep.
Take a look at this. Grabbing 20 pips just for those traders that thought that 20 pips is not going to make you a whole bunch of money. It absolutely is. This strategy right here is based on 20 pip grabs all the time. And you can see right here that big portion of that was the US dollar CAD, but we're making 1,300 pips just this month alone. If you look at the actual rate of change, we had 11% return on the actual trading. So grabbing those 20 pip profits all the time, as Tyson just mentioned right here, having a strategy that grabs 20 pips out of the market just because you want to get in and out and not get yourself involved in too much fundamental news that's going to drive the market in these big trends. If you want to grab those 20 pips, making sure that you got your directional bias. But if you get caught up in the wrong direction, be very quick to be able to make a decision as to how far the market can move against you before you should start seeing some type of return, or at least start seeing a reversal. But then also at the same time, when you identify a turning point, make sure that you have managed your risk in the beginning so that you have buying power to be able to get back into the market to get your cost averaging level back down to a level where you can actually still make profit. Very important is there's a lot of strategy behind chasing after 20 pip grabs. You also have to have a backup, and your backup is having buying power, making sure you've got enough capital to ride the wave, but also to rebuy it back in again to go ahead and make some profit on those trades. So it is a great strategy to use. And Tyson, I think that's a great call on that Aussie CAD there. And yep, you can take all the profit on that trade, my friend. All right.
Awesome.
There's another currency pair. That I've been monitoring today. We actually spoke about it today, and I want your guys' thought on this as well. Let's go to the chart right here. I'm going to pull it up, and this is on the I think it was the CAD JPY. Yep, CAD JPY as well as the pound Swiss. If I go to, let's go to pound. Actually, let's do CAD JPY first. CAD JPY right here, we're right at the top. You can see that we've been range bound. Bottoms are right here. We've got tops at the top right here. We have got triples there. So we've got a lot of resistance at the moment right now. Market's really struggling. So what I did today is, in the trading room, I actually went ahead and said, let's sell with a cost averaging approach. Let's sell the CAD JPY just so that we can see if price goes back down. If it does go up further, then what's going to happen is the market's going to break out and then we have correction. You can see we've already had some good buying power on this pair already. So if we can get price to go up here without turning over here, then we're still going to be okay for the market to come back to retest the breakout and then turn around and rally. So when I go ahead and trade these support and resistance, Chris and Tyson, I like to go ahead and cost average above that so that if we are wrong and the market is going to break out, then we're going to continue with this breakout, but then we will make money on the return back because the market comes back to retest the breakout. So if we trade it at the breakout, then our first entry point will come back to break even, but the rest of the trades that we've gone in and implemented are going to make profits. So this is a good way to be able to trade these support and resistance levels and not lose money on if you're wrong and the market does break up. But here's one of them. What do you guys think about that trade? And I'm going to give you another trade to comment on as well, so you can do both at the same time. And that is on the pound Swiss right here. If we go to pound Swiss, take a look at the pound Swiss right here. This is the daily time frame. And what's happening here on the pound Swiss, you notice how the market has gone ahead and dipped, rallied. So this is my correction. I went down to the lower time frame right here, and we actually drew in a setup here on the lower time frame. Check this out. I like this play. Market gone ahead and created this wave 1, 2, 3, 4, and now 5 up here. So we decided to sell here and looking for price to drop back down to take out the low right here, maybe retest this, but we're looking to sell the pound Swiss, just a short-term sell, and probably going to make about 80 to 90 pips on that trade, and then we can make a decision on that. I've also seen that we've got a little bit of, nope, not really. I thought it was flat divergence here, but it's not. But those are the two plays right here, and I am expecting the market to drop on this down to about 125.42 on the pound Swiss franc.
Yeah, pound Swiss is in such a tight coil right now. I see that thing. It's the only guarantee that I know of in the markets, guys, is levels of low volatility are followed by expansions, and this is in a really tight coil for, man. I mean, we're talking 5, 6, 7 months now. This thing is going to break, and when it breaks, it's going to break big. I'm looking at the chart. I like to break to the downside, but I do think there's a lot of money to be made. I think you could look to buy on a break above, 28.50, or sell on a break below 125 or so, 124.50, and this thing could be off to the races.
Yeah, I mean, I was going to ask. Gary, I wanted you to kind of revisit. I mean, you were very bullish maybe 4 months ago on the pound Swiss. I wanted to kind of revisit that story with you, because I like the idea of, even if we came back to 2,500 or 2,450 or back down to that breakout point at 2,250, I still think the pound Swiss has legs to get up to like 32 and 3,400. I mean, you're
absolutely.
the wave cycle guy, you're the Elliott wave guy. Like longer term, I love this thing going to like 32, 3,300.
Yeah, and this is really not a lot to do with Elliott, but take a look here. Look at the range that we're in here. The market bounced off the support here. We're heading towards resistance, and resistance is at that 133 level. So we do have some inside Elliott structure. Here's wave 1, 2, 3, and then we've got fifth wave coming up here at about 132.40. But I agree with Tyson. I mean, this is range, right? It's a big range that we've been in here since March. But the good thing is, if you look at the smaller time frame, this is a daily. If you look at the daily, you would not want to touch this pair. But if you go down to the lower time frame, there is some short-term opportunities. And this is the sell-off that we're looking at here. It's just a short-term opportunity, because look at the trends, even on the 1 hour. Even though it's consolidated, we are getting some good movement back and forth, back and forth. In fact, this range is anywhere between, let's take a look right here. We've got almost 250. So you've got a 250, sometimes it stretches a little bit wider to 300 pips, but you're looking at 250 to 300 pip range trading right here. And inside this, there's swings. There are absolute swings. I mean, look at this big rally that we had right here. We had a, what is that? A 350 pip rally on the pound Swiss franc. So even though we've seen range bound trading here on the daily, if you move it down to the lower time frame, there's great opportunities for traders to go ahead and trade those swings. But I agree with you, Chris. 133 is definitely a mark to the upside. That does mark from about 132.60. Sorry, 132.40. It marks off as a fifth wave target. And if we get to 133, that's holding a resistance based on consolidation on that daily time frame. So we've got big, solid consolidation right there, and it's definitely a target that the market can get to.
Nice.
Yeah. And that is the fifth wave too as well. Yeah. Mm-hmm. So those are the two plays that I'm looking at the moment right now. CAD JPY, and then of course the pound Swiss franc, and that's just short term. What do you guys think about dollar pairs like US dollar CAD, US dollar JPY? I called a trade on US dollar JPY short this morning. What do you guys think about a short on the US dollar JPY?
Well, honestly, I'd love to get it because I want to stay overall long on dollar yen. Look, I had Perfect Storm Pro pick up buy trades around 109.50. It trailed it all the way up to like 110 plus, grabbed like 55 to 60 pips total. I hope we get another dip because, again, just like Tyson mentioned on the pound Swiss, you can look at this thing for the last 1, 2, 3, 4, 5, 6 months. Lots of consolidation. Two things that I'm thinking about for dollar yen. The Nikkei 225 and the U.S. markets. If we continue to see this risk appetite overloading the markets, I think the dollar yen has one of the biggest open space trades out there. If we break above 111.50, 112, there's nothing stopping this dollar yen to 115 or 118. So I would like to have a dip and a pullback. Otherwise, we might look at this thing in the next 2 weeks and all of a sudden it's like it's off to the races and we might not get a pullback. So I think if we get through Q3, which by the way is this week, right? We end Q3, we start Q4. If we get through this week and we still keep that tone of risk appetite and the market's going to keep chugging along, I mean, dollar yen to me, it's like, I know this is one of my big predictions this year. I could see dollar yen down to 101 or I could see it all the way up to 118. Right now, after this consolidation, I almost feel like with the Nikkei 225 on the path going towards those 30-year highs again, that the Japanese yen is going to continue to stay soft and stay dovish or weak. And I think dollar yen gets bid to 115 to 118. Give it a couple of months, but we're close. I think if we're getting dips now, Gary, I think it's a good short-term sell, but I want to have a stop loss. I don't want to scale in. I don't want to fight the dollar yen. If this thing goes bullish, man, this thing can go ballistic for the next 2 to 3 months and go up 500 pips.
Well, no fear, my friend. No fear. Don't fear.
Yeah.
But if you look over here, this is the thing. I am cost averaging in on this, and we're actually looking for just a 20 pip grab on that. So the US dollar CAD is just a 20 pip grab. We sold it 110 and 96, and we're looking for just 20 pips out of that. And the reason for that is I've got a very small divergence here. You can see here we've got momentum moving down. I like the way it's gone below the 100 level there and gone back above there. So I like the divergence here. We've got a sell here at the top, perfectly in line to target this bottom right here. So that's about a 43 pip opportunity. 20 pip should be a no-brainer. So we're in on a 20 pip opportunity here. I did scale in 25 pips apart from each other right here. So we've gone ahead and placed a trade this morning. And we're going to see how that plays out. I do want to go back to something here. I just remembered something here. And that's on the pound Swiss that I want to bring up and mention something. Oh, yeah. Just so that you know as well, Chris and Tyson, we sold the pound Swiss right here. But what we did is we used a cost averaging, a well thought out plan, right? And the plan was this: we sold at this level because it was the high. We then went ahead and re-entered with the pending order there at the 127, and then we got one at the 144 and one at the 1618 where we doubled up on the 1618. So the reason why we did this is that if the market does not complete this fifth wave and it moves down, we'll make money. But if the market does want to go up and complete the fifth wave here at the 127, we're going to re-enter because we know that the downside potential is all the way back down to this low right here, which is our fourth wave. So we'll probably have about 120 pips in two positions on this that we'll be looking to gain on. But then if we are wrong and there's not a fifth wave and there's an extended wave, and it goes all the way up to the 1.618, then we're going to have multiple entries there, and we're going to have a lot more profit because the target will still be down here. So we've got a much bigger potential if the market does move up. So if we're wrong, we're going to be okay. But if you're right, we'll pick up a profit, get the heck out of Dodge. So making these short-term gains on these type of setups is pretty solid, and it's got to be a thought-out process. Getting in on the market on these cost averaging approaches, you've got to have a thought-out plan as to exactly why you're entering at these levels and make sense of it, because if you don't go back to your technicals and look how the technicals are set up, you're not going to know which levels the market's going to probably want to turn at. And so to get the right entry points, or at least the entries at the right places, check out the technicals and make sure that they're at good key levels of support and resistance. And it could be fibs as well. All right, so those are the trades right here. Let's talk. We've got a few minutes left before we close. Let's talk about cryptos, Tyson. I know, Chris, you went in on the Cardano, but there's some, and that was a couple of weeks ago. I know that. Hopefully you buy more in on that because it's certainly at a good buying place.
Not worried about it. Yep.
Okay.
I see it pulling back to 150. I'll buy more. It's fine. Honestly, all I'm doing every week is setting chart alarms. That's all I'm doing. Yeah. I'm keeping tabs on cryptos. I'm buying, levels I want to buy at, and I'm just being patient. That's all.
Okay. So a strategy that I've been using on cryptos, and Tyson, you can go ahead and comment on this as well. You're the expert on this one right here. So we've seen that we're getting over the last 24 hours. We do see that we're starting to see a market cap starting to trade lower. We're seeing a lot of altcoins dip over here at the start of Monday. But if you look at Friday compared to Friday to Sunday, we actually had some good rally. I spoke about it in one of my sessions on Friday. I spoke about on a couple of cryptos. One of them being Uniswap. Uniswap rallied over the weekend 35%. And so my thing here on these altcoins is that they're not my long-term holds anymore. They are really short-term buy opportunities because if you take a look at any of these cryptos right here, and we mentioned one this morning, and I also spoke about another trade on, let's take a look here, on Chainlink. We bought on Friday at $22.40 on Friday on Chainlink, and it was down for the week. It was down 25% for the week, which means this. If you buy at that level, and I'll show you the chart, what the chart looks like, but if you buy at that level and you just make it to the open of the week from the previous week, you've made yourself 25%. Forget about the targets to the upside. You can make 25% on these gains. So when I look at these, when I look at the different altcoins and I start speculating on which ones to go ahead and trade, all I'm chasing after is these opportunities that altcoins have dropped 25, 30%, and that's the way to get back in. But it's always supported by what the Bitcoin is sitting up right now, how Bitcoin's set up. So let's go to the charts and let's go ahead and reflect what's going on here on the chart, because I think it's important that we address this right here. Check this out. So here's Bitcoin sitting at right here. Take a look at Bitcoin. I've got a lot of chatter saying, oh, Bitcoin's going to go lower than 42,000 this year. If it's going to go low, it's going to be a little peak, and it's going to come back up again. We're sitting at a key level right here at 42,000. 42,000, Bitcoin's going to hold above 42,000. We're chasing after. This is going to be the next target. Next target for Bitcoin is going to be up here at 57,000. At 57,000, now I'm going to start getting worried. Now, we did have a sell-off because of the lockdown against cryptos in China. We did have, not lockdowns, but bans on cryptos in China. But we have seen a recovery since the last conversation we had Friday. So there is definitely support holding Bitcoin, and it's not breaking through the 42. No matter what China says, we're not breaking through 42 right here. 57 is going to be the next upside. So I'm going to say that because we're in a fourth wave structure, and fourth waves are more complicated, then that means when we go to these altcoins, and let's go to the one that we spoke about right here, Chainlink. You go to Chainlink right here. This is the reason why we bought in the Chainlink, because price had gone ahead and had a nice little rally right here. We pulled back. It got to the 1.27, and it created an irregular flat. Irregular flat is when it takes out the lows right here, you start buying. So this is why we started buying here. But we definitely put in additional orders here saying, hey, we want to buy at these levels if market drops down a little further. But we're buying at this level. And if we can go to the target of this one right here, we're looking at price moving up. Look at that percentage. We're looking at 78, call it 80% return just on this last swing right here. And that's moving from about $22 to $41 or $42 in the current move. And that's one of the pairs, and there's so many of these listed. Soldana, not Soldana, it's Chainlink is one of them. Uniswap is the other one. We've got Solana, that's the other one as well, that's doing really well. And then, of course, you've got I'm getting mixed up here with the names here.
We've got Dogecoin.
I was thinking Doge or Shiba Inu, one of the two.
Yeah.
Let's don't rule out Doge. No, it's Polkadot. There we go. Sorry, Polkadot. But don't rule out Doge.
So I'm gonna agree with everything you just said. I actually last week became, I got to tell you, we're in a scenario, and I think we're getting close to a scenario where we may see some flushes down. We may see some flushes down to levels that are kind of crazy. I mean, we could see a flash crash to 25 or 30,000, but it's going to be bid aggressively. It's going to be one of those overnight, if you weren't in front of your screens for that 1 hour, you missed it type of moves. But I got to tell you guys, I think we're running into some scenarios where if you can buy at these levels, I'll give you a couple examples of some coins that I think are just sitting, just steals right now with massive potential. I think Litecoin is so overlooked. I want you guys to think about this. Litecoin has the longest average hold time of all coins on CoinMarketCap or Coinbase, I mean, which means the people that are in it, they're in it, man. It's
diamond hands.
They're holding, exactly. And it's got a finite supply. It's mineable. It's got all the makings for something that I love. Now it's boring, right? It's one of those that I think you just need to sit on. You wake up one day and it could be at $5,000. You consider if Bitcoin goes to $1.5 million in the next 10 years, which is where I believe it's going to go. That's my target. I mean, Litecoin could be at 20,000 or more. So my point is this: I think we're running into some levels, guys, that I don't think there's going to be a trader out there that's going to outperform buying and holding in some of these coins. XLM, the potential of XLM is massive. For it sitting under 30 cents, 35 cents is, if it becomes what it could become, even a fraction of what Ripple supposedly is going to be. Guys, it's working with IBM, and it's working on what's called the World Wire right now, really being used in real use. XLM is huge. Another one that's really, I love Chainlink long-term, but then there's also one called Quant, QNT, that is very interesting. What it's trying to be is it's trying to be blockchain agnostic. What it wants to be is it wants to be the indexer of all these amazing technologies that's built off the blockchain. Hey, you want to use Ethereum? Great. You want to use Cardano? You want to use List? You want to use Algorand? Awesome. We'll index it all. And creators, you can go out there and pull all these different resources from the different blockchains and create something amazing. It's almost like, imagine a phone, right? A phone has, 87 different components in this phone. Well, QNT is trying to be that group that brings all those components together, create awesome products. So I think there's, and then what happened in China, guys, you can't make this stuff up. Sometimes the markets are kind of poetic. What happened in China was amazing. In September of 2017, China comes out and bans cryptocurrency exchanges, citizens using cryptocurrency exchanges. They come out and ban, I've got an alarm going off. They come out and ban any companies doing IPOs or ICOs. And the market sells off 25-30%, followed by a 5x return higher. It goes from $4,000 down to $3,000, from $3,000 to $20,000 in 2 months. Yep. Guys, we could be setting up for this next explosion move higher. I think it's happening, and I think China's playing a bunch of games behind our back, and they want to accumulate more. So I look at this as a buying opportunity.
Yeah, I do too. And if you actually take a look over here at, let me go ahead and show the chart here. If you take a look at just as you mentioned right there on Litecoin, and I absolutely agree on that as well, because it's down 15% in the last 7 days, and that doesn't mean people must fear this. That means people must get excited about that, because that's a 15% gain you can gain very quickly from just getting to the highs of 7 days ago. And so if you look at the way the chart is set up here in Litecoin, same scenario as we saw with Chainlink. Here is your rally. Price goes up to the 144 right here, turns back, comes back into the boundary, and now going deeper. This is buy zone right here. It's an irregular flat. We talk about it all the time in my trading rooms. It's an irregular flat. Is a great buying pattern that is now set up here on Litecoin. So I agree. Litecoin is a more stable coin. It's one of the coins that you want to put into your hollow box and keep it there and don't lose it. I think
it's going to be stable until it's not. I think it's going to be like, oh, boring. You wake up one day and it's $1,200, and it's like, oh, what the heck happened?
Well, that's the thing. You see, there's certain coins you want to keep, and there's certain coins you want to get rid of very quickly. So you make your money, get your big returns on that, but get out of those. I don't want to. Any of these smaller altcoins are good buying opportunities to make money quick, but then to get out quick. Just as much as you get in, you get out. And that's the same for Ripple. Ripple, not Ripple, but Loopring. Loopring was a good buy for us. We bought it at 15, 20 cents. When it rallied up and got to 80 cents, we cashed out very quick. We had a spike in it. We cashed out. My son Cameron called me up and says, "Dad, do you see where Loopring's at?" I'm like, "No." He says, "It's high." I said, "Cash out." I said, "Don't even think about it. I'm not even looking at the chart." I'm like, "Just get your money, get out." And I asked him one simple question: "Is there anything else moving strong?" And he said, "No, just a Loopring." I said, "Cash out. Let's go." And that's what you do with those type of coins.
Great job.
All right, fantastic. Good. We had a lot of conversation right here today. Good to be back, guys. We're going to be back next week, same time. And don't forget, Tyson mentioned, once again, Tyson want to mention again about the webinars that's happening this week?
Yeah, 7 p.m. tonight. Going to be I'm really excited about this. It is a staple, a foundation of it. And honestly, I'm going to make a bold statement. I think what we're going to talk about tonight, it's been one of my staple income providers for many years. I think it's actually starting to become one of Chris's bread and butters. And it's going to slowly and more build into a foundation of his forever.
Yeah, you'll see it. I mean, in the webinar, I mean, we've had nothing but incredible feedback. And what I love about it, Tyson, is, somebody doesn't have to have, typically we're looking at stocks and options traders that have, 25K, 50K, 100K, big accounts. I mean, just to get started and learn this, you can start out with $1,000, a couple $1,000 to get started and still generate some pretty solid returns. And again, the best part is, it's very strategy centric. It's very formula driven and easy to learn. And Tyson and I are happy to show you. So I've got the webinar posted in the chat today. So check it out.
It's got to be duplicatable. There's a lot of really cool things that Chris and I can do, but it takes years to learn. This is not one of those things. It's systematic. It's duplicate. It's a formula, which is really awesome.
Yep.
All right, fantastic. Well, guys, thank you very much for being here. And I'm speaking to the students, not to Chris and Tyson, because they always here every week. But thanks, guys, for joining us and listening to the session today. We're going to be back again same time next week. Make sure you guys go ahead and subscribe to the channel, smash the like button, and we'll see everyone back again next week, same time, same place. This is the team saying cheerio.